All right, everybody. My name is Jeff, and I'm from Warrior Trading. Today, I'm going to work on my watch list for tomorrow. If you guys have any questions, enter them into the old chat box there, and I'll see if I can't get to them. Take a look and see what the market's got for us tomorrow. Okay, let's see. So as part of my routine, I literally do the same thing every day. I run through my scanners here, and I see what it is that is alerted for the day. I only run my scans after hours, and I have scanners in both Trade Ideas and in TC2000 for various things. I have small cap scans and mid and large cap scans looking for different criteria. So right now we're looking inside the TC2000 scanner here, and we're looking for long bias setups. Now tomorrow's an interesting day in the SPY. Let's start off. Let me preface this with kind of where we're at here. So we've been bouncing off of the support area for most of 2016 here. This 181 spot, right? That's the big area that everybody's kind of watching to see what happens. If we get through that, then we have a good chance of moving much lower. It acts as support from all the way back in April 2014. So basically, we have this giant bottom here, and right now we're bouncing it off it once again. We've gapped up the last 3 days in the row, or the previous 3 days here. You can see these big market gaps. The only issue is they're on super light volume. So I'm not sure. That can mean a couple things. It means that maybe there's not a lot of it's a holiday week, so maybe not a lot of traders are around. But more realistically, I think what it means is that there's not a lot of conviction in this move to the upside. There's not a lot of buyers jumping on the bandwagon here just yet. People are still sitting on the sidelines. They're still sitting in treasuries, and they're not really quite ready to put their money back into equities yet. So really watching over this 194 top here. This is going to be the key area, the instrumental area that we need to be able to break through. Whether we do it tomorrow or not, I don't know. It looks like after hours trading, futures are sideways. They're still around 192 or so. I don't think we'll get a gap tomorrow, but remember, the more times we test this resistance spot between 193 and 194, the more times that we test it, the more likely it is to either break or fail. And it's just going to depend on the strength of the market at that time, economic data, what oil's doing. A lot of macroeconomic events are in play right now. A lot of international economies are weighing on our own. So there's a lot of factors that go into what the S&P is going to do. In the end, the point is it doesn't really matter for the way I swing trade, because I'm looking for opportunities both long and short. And so there are opportunities every day. There are stocks moving up and there are stocks moving down, regardless of what the market is doing. So the trick is to find stocks that are good setups. You want to find strong stocks in a strong market, and you want to find weak stocks in a weak market. And you want to have options every single day so that whatever the market gives us, we'll have something potentially in play. Today we closed up a position on Solar City. We took a reversal. We did a buy right back here at about $18, just under $18. Okay, we did a buy right down here at this little low, this doji day. We ended up getting a nice pop up. We had a high of about $23. Never did get called out, so I ended up closing out the buy right today. I was maxed anyways. When you do a buy right, you're buying shares and you're writing a covered call, so your gains are capped. It's an income generating strategy. Excuse me. I was hoping to get called out, but it didn't happen, and I didn't want to let my profits go. So my trade was maxed out. My gains are capped when you do a buy rate or a covered call. So anything over $20 I wasn't making money on, so I closed out the calls. I bought those back for a loss, but I sold the stock for a 3-point win, and so we still made a few $1,000s on that trade. The future of this here, it could very easily fill the gap and move back up here to 25 area. Don't care, not in it anymore. We made our money on it this week, and we'll look for other setups. We opened a bear call credit spread today on ConocoPhillips. I'm long about 8,000 shares of USO. Pretty substantial position that I've been holding for a while. Looking to not necessarily accumulate more. I have a covered call, or I have calls that I've written against that position also. Looking to get called out on those. Whether or not we do, I don't know. Oil is kind of trading in an area where we can see, where we haven't seen for the last few weeks. We're looking for, what I'm looking for is for a move back to $9 here. The calls are for $9. My position average is low 8s, 831, I believe. Looking for the $9 area to hold. We tested it today for the first time in a few weeks, and if we can get back up and over this area, then I'll probably look, if I don't get called out, I'll probably look to cover, and I'll sell the 950s or $10 calls for March. And we'll just kind of evaluate the trade as we go there. But USO oil, is one of those things where a lot of false pops, a lot of false positives. So it's definitely oversold, definitely due for a move up here, but I don't know how much of a move we're going to get. I don't want to get caught in a dead cat bounce. And so we opened a trade on COP today, which is what I like to say. Like I said, it's a weak stock, and it's a strong market now. So in a weak market, especially if oil continues to roll over, this is my hedge. So I did a call credit spread, bear call spread on this 36 by 39, looking for a move back to the lows here by March expiration, and a breakdown under $30. I think if oil continues to come down, this is definitely going to come down. Oil's been putting in a little recovery, and this hasn't really followed suit. It's in a very bearish trend here. It's very liquid. The options are very liquid, so it's a nice setup, and we got a good credit for our premiums. And so we'll see what happens over the next few weeks here. But like I said, this is my hedge to my USO position. So if oil wants to come back down, at least while I'm holding it, I want to make some money on the downside. And so this is the setup that I chose to do that. So only a half position. Now you got to keep in mind when you're hedging, you don't want to hedge with 100%. You're going to flatten your trade if you do that, right? So what I mean is, if you're long 1,000 shares in one account or whatever, you don't necessarily want to be short 1,000 shares in another account, because then you're flat. So whether you're buying 10 puts and you're long 1,000 shares, whatever, basically once the puts start making money, it's 1 for 1, and you're losing dollar for dollar with the shares, and vice versa, to the upside. So keep in mind, you don't want to hedge with a 100%. Offset options are a good way of doing this. And I used 40 contracts instead of 80 because I do have 8,000 shares. I could have done all 80, but it wouldn't really make sense to do that. So again, I went into this with a 40 contract bear call credit spread at an $80 premium is what I collected on that. So times 40 contracts. So if by expiration this thing is trading at down around 10 cents or so, or even near worthless because this thing has moved under $30, then we'll realize all of that profit, but we'll probably lose on USO at the same time, and so we'll close out our covered calls there, and we'll write some new ones. But we've collected some money while oil has moved down. So again, this is just a hedge. Just a hedge. Any questions on that stuff? I know that's kind of a mouthful there. Looking for some setups for tomorrow. I'm also short the market too. I screwed this one up, guys. I had a bear put spread on the S&P. I started last week. I tried to leg into it. I didn't. I thought I could get a better price than what I was going to, and I never got filled on my short puts. So therefore, I was long 100% of the premium on my 181 SPY puts that expired tomorrow. So those are probably going to expire worthless. If I would have been able to fill at the price that I wanted, or if I didn't get greedy and try and get a better premium for the credit on the short puts, the 175s, I wouldn't take such a big loss on the S&P. I don't know if the market's going to gap down enough tomorrow for me to get out of these puts with any kind of value, because right now they're trading pretty much worthless. So that's what happens when you get greedy. You think you can do it better. I should have just taken what it was going to give me at the time, and my losses would probably have been about a quarter to half of what they are now. But you know, that's life. So I screwed that one up, but we are short the market. So hey, you know, if we want to fail resistance here, and this thing wants to open up in the 180s, the mid 180s, I'd be okay with that, because I could probably salvage some of that position. But other than that, don't really have any other open positions right now. Looking for potential longs and shorts tomorrow. We'll take a look through the scanner results here and get some drink. Alright, so staples. We have a nice pop on staples here. I'm not sure what's going on. I have some news. But either way, it's a little extended here. It's up $1.50 in the last few days here. And I am not going to chase it at this level. Now, NMBL, this one I've had on watch before. This one I've traded before. I've had some luck with it. It's really kind of flattened out over the last few months here. You know, it's trading sideways for 2 years. Just about 2 years, from the $20 to $30 range, and then finally gapped down back in November, and it really hasn't made any kind of effort to recover. So it's finally popping up today. Hit our scanner. There is some room here. You know, if I were to look at this, I'd say this thing probably has room to the 750 area, which is the high of this range. Pretty much the high of 2016. You know, with the exception of whatever was going on back here. You know, I do like NMBL. Like I said, I've traded it successfully before. It's just a really kind of boring setup here. But this looks good for potential. You know, it's trading at the 20 EMA. It has not traded at the 20 EMA since back in early February here. It was the only other time. And so if we can get a cross over this, we get a candle over candle move above it, that's a very bullish sign. We weren't able to fully clear it previously, so this will be the first time in months since November. Since I mean, even further back than that, probably since back in September of 2015, where this thing was able to trade over one of its moving averages. So this could be the first bearish or first bullish sign of reversal. We do obviously have a lot of room. There's a big gap right here. Not sure that we're going to get into that gap at all, because there doesn't really seem to be a lot of influence from buyers here. But interesting setup nonetheless. For a move at least back to the 750 range highs, I don't see why it can't get there. That's a little over a point of room on a $6 stock. That's plenty of room to make a nice profit. So we'll put this one on watch for tomorrow. The relative volume is increasing. That's something we always want to see. This is going to February 19th watch list. So we're going to start with NMBL for a long candidate. It's finally looking to trade over its 20 EMA for the first time in half a year. Excuse me. Long entry. Open high over 6. I'm gonna have to say over 658. Long entry is over 658. Why 658? Because 658 is high of day from today. And so if we want to get long on a stock, we want to do it as it's making new highs, not on a pullback, not as it's making new lows. This is the breakout setup, so we're looking for stock to be breaking out, which means we need new highs. Very bullish, right? We want the buyers to come in and take out the previous day. So 658 is the high of day today. We're going to be buyers at 659, 660, that area. Long entry is over 658. We're going to put our stop here It's 625. We're not going to give this thing a lot of room. That's 35 cents a room is more than enough on this. Because remember, when we're buying a breakout, we don't need for it to come all the way back down to low a day after it makes a new high to make a new low before we know we were wrong, right? So we want it to pop up and we want to see it hold that level all day. Maybe it'll test it a couple times, but that's fine as long as it holds up. That's what we want to see. That's what's going to give buyers the confidence to come in off the sidelines. Shorts are going to see that there's not a lot of weakness, so they'll look to start covering because they're going to see the same thing. We give resistance to the 750 area. They'd be like, shoot, I don't want to get squeezed there. They'll look to cover, so on and so forth. That's the idea. So the target is again 750, and then conceivably we'd have room to the 50 moving average here. There's really not a lot going on as far as resistance goes on this, so I would say that the 50 moving average might play a role here. Generally, the rule of thumb is that for technical analysis, any chart pattern is going to take precedent over a moving average, but in this case there is none. I mean, there's one day where the stock traded at this level, so it's probably because the ATR is only 50 cents. It's probably if it breaks out over 750, it's not going to squeeze all the way back up to the nearest support level, which is going to be resistance right here at 980. We're not going to get a 3-point move, over the next few days. Could. Probability is not there though. But what will likely happen is if we do get over the 750 area is we will get a move to this 50 moving average where people are going to look to be like, okay, going to take my profits now because this is an area where the shorts are going to be looking to re-enter, and there's going to be a possibility for some churn at that spot. And while it might get very well to this 980 something level, probably more likely that it moves up, flags out, consolidates, and then breaks out again. So if that's going to happen, it's going to take a few days. It's not going to happen instantly. So first target is 750. The second target I'm going to put at the 50 moving average, and that is at 875. All right, moving on to the next. So, this is Denny's. Poor Denny's. This is just a nasty looking chart. It reminds me of their food. It's disgusting. This one's extended to the upside here. We're already in day 4 of a breakout. Now, guys, remember, for this particular strategy, and I go over this in great depth in my courses, we're looking for an average move over 3 to 5 days, and during that 3 to 5 day period, we're looking for the stock to move 5 to 15%. So when I'm looking at this, I see a 4-day move here, so we're already well inside the average of a stock that's going to break out. It's going to move for 3 to 5 days. Some will move 10, some will move 2, but the average is 3 to 5. And so when you're looking at a chart and you're trying to decide, oh god, this thing's breaking out, it's moving to the upside. Yes, but because we know statistically that it's only going to do that for 3 to 5 days before it levels off, consolidates. We don't want to jump in on day 4 of the move, especially since it's gone from $13 to $15, and I'm sure that's well over 10%. 2-point move on a $13 stock is probably much closer to 20%. So this is something that is extended, and we'll look for something else. Same thing here. This is pretty much a typical reversal. We get the sell-off with the market here, and then you get this parabolic reversal to the upside. So you get the sharp move down and the sharp move right back up. But once again, it's not a clean setup. It's not something we're looking at. We're looking for a little bit stronger of a setup would be ideal. We're not going to trade gold. Remember, if you guys have watched some of my other videos or any of my courses, I always talk about how if I'm going to trade a commodity, I want to use the commodity directly. I want to trade oil, and I bought USO. If I want to trade gold, I'll trade an ETF. I'm not going to trade a miner. So it's no different. So a lot of the commodity stocks that we see here are going to be gold and silver on days where those are in play. And if I want to trade those, we'll look to trade the commodity. Why is that? Yes, because miners are going to move, and these companies are going to move with whatever they mine, right? If gold's going up, then the company's going to become more valuable because they mine the gold. But you also have to keep in mind and contend with, you're holding the stock for anywhere from 3 to 5 days, maybe a week, whatever. And there's potential for a company to release information. They could go bankrupt in that time. They could get audited by the SEC. They could, any number of things could happen. Their CEO could get arrested for embezzlement. It doesn't matter. But the point is you can be trading gold. Gold can be taken off, but you're stuck in a company that's a pile of crap, and you're going to lose money on it because you're trading, something that's sympathetic to gold, not gold itself. So if it's gold and silver that's moving, trade gold and silver. Don't trade a company because the risk is higher that something bad is going to happen. You can't have gold go bankrupt. So keep that in mind when you're looking to trade commodities. So this is a nice looking setup here. I saw this one earlier. This is a decent looking setup on GoRo, Gold Resources Corp. It's a cheap stock, but it is looking like a little bull flag here, a flat top over this 180 mark. It definitely has room back up to $2 here. So you get 20 cents on a $1 stock, but again, it's a gold company. It's not an ETF. It's just a nice chart setup here. Let me see, KRA. This was on the watch list today. You can see I drew the levels out here. I do like this, obviously. The problem here with this is, kind of what I was looking at was that we're already in, day 2, 3 of this green, move to the upside. And while it's putting in a lot of consecutive green days, it's not really covering a lot of ground. Excuse me. It's not really covering a lot of ground. So in order, for me to have a lot of confidence in this trade, I wanted to see it break out and tap this resistance area at 1560 today. If you're long gold, if you're long KRA right now, your hurdle is 1560 area, and then it's going to be $16. So I do think it looks okay, but you have to respect your stop area. You now have 2 taps down here on this 20 EMA, and that's going to be your stop. Absolute worst case scenario. Again, I don't know how much size you took or whatever, but you don't want to hold through a break of a new lows, and you don't want to hold through a break of this moving average. So, keep that in mind. But I definitely think you can certainly get to 1560 and 17, and then $16 short term. And that's why I put it on watch, was for that move. But today the market was a little soft. This thing did put in a couple point move here off the bottom, so it's taking a little breather. It's nothing to really fear. But for me, because I didn't get in it, I'm not looking at it anymore. Hope that answered your question. Okay, looking for something else here. More gold popping. Silver popping. Oil and gas. Good old Twitter. Twitter having a big move off the bottom, making all-time lows at $13.91, and now it's back up to $19 in 4 days. Look out. Clearly that's a chase. It's not a good setup at this point, but very strong recovery. You got it, Gene. Pure One. Pure One, this one's crazy. Look at this. We traded this last year, right here. Wait, where did I trade this at? Traded it right here. We got a gap up on it. So we were in this thing. It ended up gapping up on us a point or two. Ended up running, and now that was at $14-15 whenever we traded it. And now this thing is down to $4. Just amazing what a short amount of time, what can happen in a short amount of time. Just a year, this thing has lost over 70% of its market cap. So, anyways, again, this is a decent looking setup here. But the problem is that we're already into day 4 of our 3 to 5 day average, and it's around a point. So this thing has moved from $4 to $5. That's a 25% move in just 4 days, and so that would be extended because we're looking for that 5 to 15% over 3 to 5. This thing has moved for 4 and 25, so I don't know how much more is reasonable to suspect. Remember, it's not a bad setup, but we're looking for high probability setups. All right, so this is one we're trading here on this. What is this? UVE. It's a little bit lighter in volume. It only trades about 400,000 shares a day, but it will move a point. And remember, we're only looking for a few percent with our size. So this thing definitely has room here back to, well, the $20 area is a given. From 19 to 20, I think we can see that tomorrow if the market holds up here. We're really only about 2 days into this move. And so we do have more room to the upside. I think we can get a point out of this intraday. And if things are really good to us, we'll hit this spot right here at 2050. Why did I pick these spots out? Well, if we look back, we know that there's resistance here at 19 bucks, right? Because that's the high of day was 18.95 today. It was $19 and $19 back in January 15th and 16th and 14th. So we know that this $19 area, which is also support back in here, at 1895, this little area, this first line, is going to be our breakout spot. We can see pretty clearly that previous support became future resistance and is still resistance. So if we can break through this, relative volume can stay high. We should be able to poke through to the next resistance area. Where's the next resistance area on this? Well, that's tough to say because the 50 moving average is kind of hanging out here at 1992, and this middle line here doesn't really coincide with much. There is a little support area down here at 1973, so we could see a move from over 19 to 1970, 1990. That would be the first target, somewhere in that range. But definitely the second target is 2050. If we have a big day, this thing, I mean, look at, it's capable of big moves, right? Back here on what is this? November 23rd. This thing put in a 3-point day, so 2.5 point day. So this could easily pop up and hit 2050, which is previous support right through here back in December. Previous support will become future resistance. So really, that's the duration of the trade we're looking at here. This is not a bad looking setup. Let me just check the fundamentals on it because we don't want to bump into earnings or any kind of negative market catalyst or negative catalyst for the stock. Okay, earnings are coming up next week. Yep, Smiley, I'll take a look in just a minute. So I just want to write this down real quick. I like this one here. UVE. Now, keep in mind, this is going to be a swing trade on the swing trade watch list. It does not mean that I'm going to buy it tomorrow and I'm going to hold it for 4 days or whatever. I don't know what's going to happen. So I might buy it and stop out tomorrow, or I might buy it and sell it all tomorrow. But here's the plan. When I put these things on watch, especially on a Friday of a light volume week where there's a lot of risk going into the weekend, I'm going to look at a couple things. One, I'm going to look at the price action for the day. Did we get a trigger early in the morning, and did it hold that trigger spot all day, trading above it? Did we close at high of day or just below high of day? Or did we pull back and close near the lows or the entry? If we closed at high of day, the relative volume was great. Everything held up in the trade, and we were just about to test the next resistance level. Then I would definitely look to hold some of this over the weekend. Probably won't be full size. I like to hold $50,000 to $60,000 when I start a trade out. So that's going to be what, 2.5, 3,000 shares here. Probably not going to hold that much over the weekend. I'll hold half size, so that means I'll scale out tomorrow for sure. But if we get a close at the highs or just below the highs, it's a good opportunity to hold a little piece for that bigger move, either up to 2050 or up to the next spot, wherever that might be. It looks like 2150 might be the next spot. So we can get a couple points out of this with a few thousand shares. That's obviously going to be a very nice winner, but we'll see what the market gives us. I like how it held up today over this 20 EMA. It put in a nice big 5-6% day, despite the market being kind of sideways and weak. So UVE is going on watch, on swing watch for continuation over $19. Stop will be, I'm going to give this one about 50 cents a room. I don't know how it trades, so I haven't traded this before. I don't know what kind of price action it has, but I'll give it 50 cents a room. Keep in mind, that's just a guide to help me and anybody who follows these trades determine their size. Usually 99.99% of the time, I'm going to use low of day as my stop. So if this thing is low of day at 1862, I'm going to use 1861 as my stop. because this is a breakout trade. If I'm getting long over 19, I'm not gonna buy it at high of day and hold it while it breaks and continue selling below low of day. So that'll be my distance. So from $19 to 18.60 is whatever, 30 cents. So I'll have a 30-cent stop. If my risk is $1,000 per trade, I'll take 3,000 shares, and that'll give me $900 of risk in the trade because I have a 30-cent stop. And I got to account for some slippage. So I'm willing to lose $1,000 in this trade, but we can easily make $1,500 to $3,000 depending on what happens tomorrow. So it's at least a 2-to-1 risk reward, and we're going to start with that. So the stop is going to be at 18.50 initially, but I will make it low of day. Unless low of day is like at $18, I'm not going to put a stop $1 away from my entry. That's ridiculous. But just as a guide, it's at 18.50. First target, 1970 to 1990, and then 2050. Okay, so that is going to do it for UVE. And this Smiley wants me to look at CXRX. CXRX Biotech. So biotech is on watch right now. I put it on the weekly watch list because of this right here. Now I missed my opportunity because I wasn't paying attention to short this. So what I was thinking was going to happen here, much like the S&P, we had this big run up right after this big sell off. We had this big run up. We hit resistance here, and then we're going to sell off back down to support. So the opportunity to sell a bear put spread, would have been perfect. I would have loved to have gotten in closer. I would have loved to have broken over 270 here and then move back down, but we really didn't get that opportunity. So I was looking at the 265 to 255 bear put spread here. It would have been in the money by now, and we would have been 4 points away from maxing out this trade. And so there's a lot of opportunity here to make some money. But we'll see. I mean, there's still another 20 points of downside here. We'll see what happens tomorrow. Like I said, I'd much rather put this trade on a little bit higher here at the 270 mark. But my alert never went off, and I wasn't looking at this in real time. So by the time I pulled it up, it was already in play. And I like to put on, if I'm looking at this for like a dead cat bounce here, right? And this big sell-off, a bounce, and then we're going to sell off again as it fails resistance. That's a dead cat bounce. Very short-lived recovery or relief in this particular stock. What I was looking for, wow, completely forgot what I was going to say. God damn, I'm getting senile. Okay, well, I don't know what I was going to say, but I was looking for it to hit this 270, the 270 mark. That's where my alert was set on my charts. I was going to enter the trade and look for it to come back down. Looks like it's coming back down now, but that's okay. There'll be plenty of other opportunities, so we're looking at other things, and we'll see if this ends up testing it again tomorrow or not. There's just no way of knowing right now. It looks like the S&P after hours is finally starting to sell off a little bit. So we broke down under 192 here. We'll see if we can't get a gap down tomorrow. And I bet this thing will go all the way down to 250, 245. Be a nice trade. So anyways, to answer your question, I got rambling there. CXRX, very similar chart to IBB, right? Let me overlay a chart of IBB here. You're going to see this because these are all in the same sector here. So here's a chart of the IBB, and in the background here you can see this chart of CXRX. Goddamn, eye itches. So we have this big recovery, move up, and a sell-off today. Well, we have a sell-off, big recovery, move up, and a sell-off today. So watch IBB. And we'll see what happens here. Definitely, if this thing breaks down under the 20 EMA here, it's going to come back down to $26. So this looks like a short, not a long. If it gets over $30, it looks like a long, not a short. So your entry, right now, obviously you're range bound, but your resistance is just at 30 here, and your support is down here at 26. So you're at the top of the range right now. Good opportunity to short. You tapped it twice here at 30. I think this thing comes back down. I think that's what IBB is doing, like we just talked about here. And I think you're going to see the same exact chart. Okay, Gene. Gene, this has been a momentum name in the past. This thing has been a former huge runner, but you know, it never ever closes near high of day. If you look at all these big spikes here, with the exception, nope, even that one. I mean, none of these spikes, they're all just giant wicks, right? This thing always gets hammered by the end of the day. It's trading here just under resistance at 240, over 240. That's previous support back to here, over 240. Maybe we have some room in here to 260. I don't know, 280s or so. It's not really the cleanest setup. I mean, it's not my favorite for a swing trade. You definitely have room from 240 to 260. It's 20 cents on a $2 stock. That's 10%. I think that's a good win, and if that's all you want to trade it for, you buy it at 240, you sell it at 260. I think you've done a good job. I wouldn't bank on getting in one of these 2-point days where the thing moves up for no apparent reason, but you never know. If you do, then good for you, but these things are pretty wild, so it definitely looks good over 240 for move to 260 and then maybe 280. That's my 2 cents. A lot of twos. Okay, we're going to look at some short trades for tomorrow. Like I said, I like to have both long and short bias setups. Then that way, whatever the market wants to do, I don't care. I have trades ready to go either way. This is interesting. Definitely have this nice move up over the past few days, like everything else in the market. And then, now it's trading here just above previous resistance, and it has room down and through there. It's a little wide. It's $4 ATR. It's just a little expensive. I just don't like holding $90,000 of a stock, for example. That's going to move, 4 points intraday. It's a little harder to manage risk, and it's not probably as high probability as some of the other things that we can find. There's going to be a lot of algo influence in those expensive stocks. Here's a good looking one. I do like this one. It's trading here at long-term support, going back into the middle of January, under $24. I like this for a move down. We get room down to 2260s or whatever. I think this is probably a decent short setup, especially if IBB continues to roll. Keep in mind, this only trades 200,000 shares a day, so don't try and take 5,000 shares and buy 5% of the whole float. That would be silly. We definitely don't want to get trapped in something and have liquidity issues. So MCRB here, this looks like a decent short opportunity to me. We have this nice run up. It's testing the 20 EMA. It's failed it once, it failed it twice, it's failed it 3 times. Finally, the long said, screw it, I'm out, and the shorts came in, and now it's trading just above long-term support. So with the weakness in play, with the markets rallying and then potentially fading here going into the weekend, this looks like a good short opportunity under $24 for a move down to 22.70. So shorted at 22, buy it back at 22.70. You make yourself $1.30 or whatever, and even room beyond that. If it hits the lows down to 21. So something to keep in mind for tomorrow. So let me check the fundamentals on it. You are welcome for your feedback. Not a problem. Okay, this has earnings coming up next week too, the 25th, but that is 7 days from now, so I don't care. I don't plan on holding a short for 7 days, especially in this market. So just want the opportunity to trade something tomorrow based on a daily setup, and this is what I'm looking at here. So we see MCRB, short watch for breakdown of long-term support after failing to hold up over the 20 EMA. Move down with IVB. Short entry is under $24. We're going to put a stop at $25 for now. Probably, actually, you know what? I'm not going to give it $1. I'm going to give it $24.75. But even still, I'm not going to give it, like I said, it's going to be whatever the high of day is because we're shorting this. So it's going to be if the stock opens up and it rips to $24.50 and then sells off for the rest of the day, then high of day is $24.50. That's going to be my stop. If I'm short, I don't want to hold it past high of day. So the stop is going to be $24.75 initially, which means I'll have 75 cents of risk, which means I can take 1,500 shares or so. Because it's volatile, I don't necessarily want to, it's a wide mover. This isn't one I would want to take full size out of the gate. Now, I said I'd normally like to hold anywhere from $50,000 to $60,000 worth, but on a stock like this, if I were to take 2,000 shares right out of the gate with a 75-cent stop, I'm already over my $1,000 ideal max loss. So don't want to put myself in that position. So what I would do is I'd scale. In this particular example, I'd get short on this trade under 24. I'd buy it or short 1,000 shares, and then I'd wait until I had some cushion, maybe 23.50, 23.30. I'd add another 1,000 shares, lower my average, but now I'd have 2,000 shares for that move down to that target area of 22.70. So that's kind of how I would play this. It is a wide moving stock. It has a $2.30 ATR, so you're going to see it drop 50 cents and then run up $1, and it's going to drop $1.50 and run up $1.25. So it has a big range it can work in, and we don't want to put all our weight in the beginning of the trade because then we might end up getting whipped out. So we definitely want to see how it trends. If it's short, if it's selling off, we want to short into that weakness and look to cover it at support. So that's the plan for MCRB here. The target is 22.70 and then 21. I don't think we'll see 21 because that's going to be the 2-year lows, but you never know. Okay, see if I can't find one more short setup here. So this is Kite. Let me look at Kite. Kite for a short. So again, it's another biotech. I've traded Kite in the past a few different times, and I have never made money on this name. For whatever reason, I am not good with this. There's a few companies, YY, Kihu, QIHU, Kite is definitely one of them. There's a few companies, names I avoid. Another one is FireEye, and another one is Pollo Loco. Loco, ticker LOCO. Hate those names. And like I said, never done well on them, and so I will avoid them at all costs. This does look like it is an extended stock here. It's run up, obviously, with everything else in the last few days, and IBB put in a selling day, and now we're seeing all the biotechs kind of start to pull back here. And if it turns out I was right with what I was saying about IBB, where we see this failure at support, failure at resistance, and we see move down to support, it's a dead cat bounce. We're going to see that in Kite and MCRB and all these other stocks that have very similar setups. So Kite is another good one. I just don't like it because it can have 50, 60 cent spreads. So, if I wanted to take 500 or 1,000 shares and I buy it or short it, because of the spread, I'm already down 50 cents on the trade if I have to get out. So it's just not something I like to deal with if I can avoid it. And I've never had good luck before. PFPT, this is another one. We have this big sharp sell-off and somewhat of a parabolic recovery here, back up to 43.40s, and now it's looking to come back down. Don't really like that setup that much. A lot of these stocks are just doing what the market's doing, so it's hard to find a stock that's not looking oversold. So many of these are just trading with the market, and that's what stocks do, right? The S&P is comprised of price action of the stocks that make it up. So, there is going to be a lot of correlation. The only time you're going to see some variation is when there's a catalyst in play or some sort of event that would give the stock a reason to move independent of what the broader markets are doing. And so because there isn't really anything for most stocks on any given day, unless it's their earnings or some sort of press release, you're going to see them just, everything's going to look like the broader market. All right, let me get away from you. Let me go back up here. Alright, so PFPT, let me check on. This is not my favorite setup here, and I'll tell you why. As soon as okay, this doesn't have earnings coming up for a while. So we have this big sell-off, right, and then the sharp spike back to the upside, this V pattern here, very volatile. I don't necessarily like that it has a $3.50 ATR. It's just, again, it's another one of those that is going to move a lot intraday, and so you have to manage it actively and take profits, because it might start off at $40, $41 tomorrow when it opens. It might hit $37 lows and then close at 45. And if you're not paying attention when you get that move, it's kind of one of those things that it's gonna be very whippy, I suspect. But we'll put it on watch here because it is trading at fairly technically important levels. Okay, so it failed this resistance area here over 43, $44. Didn't even get that high. Start coming in here. So 41.07 is low of day, and 41.07 is support. So why is it support? Well, I don't know. It was support back in here. It was support back in November. It was a resistance sort of back here in September. Definitely almost resistance in July. So definitely support back in March of 2014. So I don't know why that level is important, but it doesn't matter. If we draw our daily lines out, we see, okay, it's trading at support. So under that level, we'll see some stops fire off, and we'll see some shorts come in, and we'll see it move down to the next level. So that's our target. What's the next level on this trade? How do we find it? Well, we get our line out here, and we draw, I'm going to guess we're going to see something at $40 here. That's what I'm going to guess. Okay, so $40 coincides with this little red spike. This thing gapped up and sold off at $40. 40.03 was high of day. You can see this whole range right in here back in August of 2014. This whole time period, we're trading at just under $40, right? And another spike back here in October of 2014 where we had a high of $39.97. So that's $40. In the back here you can see it was support in March, and I don't need to go back further than that to know that the first target on this trade is going to be $40. So this thing is trading at 41.07, closed at 41.22. We're going to look to get short under low of day at 41.07. So we'll wait until the $41 area because it's a whole dollar. Why am I waiting until the whole dollar? One, because it's 7 cents. This thing moves $3.50 in a day. I will risk 7 cents. I will give it up. I will leave 7 cents on the table to make sure we can get through that whole dollar. Whole dollars and half dollars, we know, statistically hold high. They're a psychologically comforting number, and they're going to hold a high number of stops and orders. So once we get through $41, there's a good chance that we're going to be able to move down to the next target. But if we don't, then it's going to be a support area, as it is right now, a support area, and buyers are going to come in and prop this thing up. So I want to see that area break before I get short. I don't want to get short premature to that. So my short entry will be under $41. My first target will be $40. I'm going to cover, $40.10, $40.12, $40.06, whatever. I'm not going to wait till the whole dollar because it doesn't always tap the whole dollar. It's just an area, right? It's not black and white. Trading is not black and white, and neither is support and resistance. Some days it's at $40, some days it's at $40.12, and some days it's going to be at $39.90. So we have to be flexible, understand that. And if you make close to $1 on a move with 1,000 shares, that's okay. And then we'll sell half there, move our stop to break even, and we'll see if we can't get it down to the next area. So first target is $40. We know this thing moves $3.50. Let's see if we can find another area of support. I'm suspecting it's going to be $38.20. Well, why that area? Because that area is going to be resistance back in July and May of 2014, also back in April of 2014. It hasn't really been in play since then, and I suspect that people, when they're looking to see how far this thing can go, that'll be another area. So first target $40, next target $38.20. Again, not at $38.20, but that's the target. Looking to take profits along the way. $39, $38.50. Keep moving my stop, and that's pretty much how I plan to trade this. If I get an opportunity to enter it. That's PFPT. So another short idea after a parabolic recovery with the markets looking for short entry under $41. We'll put a stop at $42. Room here is to 40 and then 38.20. Okay, so we have 4 names on watch tomorrow. Keep in mind, guys, it's Friday, so I don't know if I'm going to be taking 4 trades and holding them all over the weekend. Doesn't seem like something that I would do. So unless something crazy happens, don't expect me to jump in all of these just because they trigger. We're going to have to take into account market conditions, where I'm at in the day. If I make $10,000 day trading in the first minute, I'm not trading anything for the rest of the day. I probably won't. I haven't made $10,000 in a minute in my whole life. But if I do, then I'm going to be done and I'm going to celebrate. So, we'll see what happens. NMBL, UVE are the 2 long. MCRB and PFPT are the 2 short ideas for tomorrow. Once again, I'll still be watching IVB. If it breaks over 270, I'm going to look to put on that bear put spread, and that'll be a debit spread. And if you guys don't have any other questions, I am going to log off and get some dinner and get this email sent out and post some of these charts to social media. So, as always, if you guys have questions, please don't hesitate to email me, jeff@warriortrading.com. Always happy to talk about trading and help people figure stuff out. And so if there's nothing else, I will see everybody tomorrow when either tomorrow night or Sunday, when I do the watch list for next week. So everybody have a good day. Thanks. Bye.